Today, we're diving into a critical topic that could impact millions of Americans: the potential end of the spousal benefit for Social Security. It's an essential program that many depend on, and recent proposals from Washington could change everything. Let's explore what's at stake. The spousal benefit is a cornerstone of Social Security. Designed to support spouses who may not have substantial earnings of their own, it allows them to receive up to 50% of their partner's Social Security benefits. This can be a lifeline, especially for those who have dedicated their lives to supporting their families at home. Currently, over 2 million Americans receive spousal benefits. The average check size is just over $900 per month. While this might not seem like a lot for many, it's a significant portion of their income. Without it, their financial stability could be at risk. Consider this. Out of the nearly 70 million Americans receiving Social Security, these 2 million individuals rely heavily on the spousal benefit. That's about 1 in every 35 Social Security recipients. The sheer number highlights how crucial this benefit is to so many families. Imagine the repercussions if the spousal benefit were to disappear. For the average beneficiary, losing nearly $1,000 a month would be devastating. It's not just about the money, though. It's about the security and peace of mind that comes with knowing there's a safety net. Without this benefit, many spouses, particularly those who spent years out of the workforce to care for children or elderly parents, would face severe financial hardship. They might have to return to work late in life or significantly cut back on essentials. Moreover, the broader implications on households are profound. Reduced income means less spending on local businesses, less money for healthcare, and overall a lower quality of life for countless seniors. The potential elimination of the spousal benefit isn't just a policy change, it's a transformation that could shake the foundation of financial security for millions of Americans. In the next sections, we'll delve deeper into the financial challenges facing Social Security and explore the proposed solutions that could either save or further strain this vital program. Stay tuned to understand the full picture and what might be next for Social Security. And don't forget to subscribe to our channel for more updates on this crucial topic. Social Security's financial challenges. To understand the potential threat to the spousal benefit, we need to take a closer look at the broader financial challenges facing Social Security. The program is a lifeline for nearly 70 million Americans, yet it's facing serious funding issues that could impact all beneficiaries. Currently, Social Security is funded through payroll taxes collected from workers and employers. However, the amount collected is no longer enough to cover the benefits being paid out. As a result, the program has been dipping into its trust fund to make up the difference. The Social Security Trust Fund was built up in the early days of the program when more people were paying into the system than drawing benefits. This surplus was meant to ensure the program's sustainability. But according to the latest report from the Social Security trustees, including Treasury Secretary Janet Yellen, the trust fund is projected to be depleted by 2034. This report comes out annually, and each year the projections seem to become more dire. Once the trust fund is exhausted, Social Security will only be able to pay out benefits from current tax revenues. And those revenues are expected to cover only about 70% of the promised benefits. This means that unless something changes, beneficiaries could see a 20–30% cut in their Social Security payments. The implications are huge. For many retirees, Social Security is a primary source of income. A significant reduction in benefits would push millions of seniors into financial hardship. It's a situation that demands urgent action. With 2034 fast approaching, there's a pressing need for a solution. Yet political gridlock often delays meaningful reform. Both parties acknowledge the problem, but they propose different solutions. The challenge is finding a consensus that can pass through the political system in time to prevent a crisis. One proposed solution is to increase the Social Security payroll tax. Currently, only wages up to $1,68600 are subject to this tax. Some lawmakers suggest lifting this cap so higher, earners contribute more. For example, a recent proposal from Congresswoman Angie Craig of Minnesota suggests raising the cap to $250,000. This change could significantly increase revenues for the program. Another suggestion is to raise the retirement age. When Social Security was first introduced in 1935, the full retirement age was 65. Over the years, it has gradually increased to 67 for those born after 1960. Some proposals suggest raising it further to 68 or even 70, reflecting the fact that people are living longer and healthier lives. However, this approach also means that individuals would have to work longer before receiving full benefits, which could be challenging for those in physically demanding jobs or with health issues. Other proposals focus on reducing benefits for higher earners. For instance, the Republican Study Committee has suggested phasing out auxiliary benefits like the spousal benefit for individuals with higher incomes. This means that wealthier retirees would receive less from Social Security, preserving more funds for those who rely on it most. The debate over how to address Social Security's funding shortfall is complex and contentious. It involves difficult trade-offs and tough decisions about who should bear the burden of fixing the system. But one thing is clear: without action, the program's future is in jeopardy. As we move forward, we'll explore the specific proposals from Washington and their potential impact on Social Security beneficiaries, particularly those receiving spousal benefits. Understanding these proposals is crucial for anyone who depends on or will depend on Social Security in the future. Stay tuned to learn more about the possible changes and what they could mean for you and your loved ones. And remember to subscribe to our channel for ongoing updates and insights on this critical issue. Sure, here's a detailed script for the third heading: Proposed Solutions and Their Implications. Proposed solutions and their implications with the financial challenges facing Social Security lawmakers are scrambling to propose solutions to prevent a crisis. These proposals aim to address the looming shortfall and ensure the program's long-term sustainability. Let's take a closer look at some of the key proposals from Washington and how they might affect spousal benefits and the broader Social Security landscape. One of the prominent proposals comes from the Republican Study Committee, RSC. The RSC has put forward a plan they call Fiscal Sanity to Save America, which includes several measures to reform Social Security. A significant part of their proposal focuses on reducing costs by limiting or phasing out auxiliary benefits for high-income earners. Auxiliary benefits include spousal benefits, which are vital for millions of Americans. The RSC suggests making modest changes to the primary insurance amount, PIA, benefit formula for individuals who are not near retirement or who earn more than the wealthiest beneficiaries. For high-income earners, this could mean reduced spousal benefits or the complete phasing out of these benefits over time. This proposal aims to ensure that Social Security funds are directed toward those who need them most, rather than those who have substantial other sources of income. This change could have a profound impact. Spousal benefits are particularly important for those who spent significant portions of their lives out of the workforce, such as stay-at-home parents. Eliminating or reducing these benefits for high-income earners might make sense from a fiscal perspective, but it could also create financial stress for some families, especially those on the cusp of the income threshold. On the other side of the aisle, Democrats have proposed different approaches. Congresswoman Angie Craig introduced a bill called You Earned It, You Keep It, which seeks to eliminate the taxation of Social Security benefits. Currently, Social Security benefits can be taxed with up to 85% of benefits subject to federal income tax for higher income beneficiaries. Craig's proposal aims to end this taxation, allowing retirees to keep more of their benefits. However, to compensate for the revenue loss from ending the taxation of benefits, Craig's bill proposes lifting the payroll tax cap. Currently, earnings above $1,68600 are not subject to Social Security taxes. Craig suggests raising this cap to $250,000, meaning higher earners would contribute more to the system. This change could generate significant additional revenue for Social Security, helping to shore up the trust fund. While these proposals focus on different aspects of Social Security, they both aim to address the same fundamental issue: the program's impending insolvency. Another commonly discussed solution is raising the full retirement age. As people live longer, healthier lives, some lawmakers argue that it makes sense to push the retirement age higher. Currently, the full retirement age is 67 for those born in 1960 or later. Proposals have been made to raise it to 68 or even 70. Raising the retirement age would mean that individuals need to work longer before they can receive full benefits. This change could be particularly challenging for those in physically demanding jobs or those with health issues.